EURUSD. The ECB has published fresh statistics on changes in assets on its balance sheet. Over the past week, the indicator rose by €16.1 billion, against an increase of €21.7 billion a week earlier. The growth rate has slightly decreased, which is a small but still positive factor for the euro. The yield spread of government bonds in Germany and the United States remained virtually unchanged, which indicates a sideways trend in the bottom currency pair. Tomorrow, the U.S. Federal Reserve will make the last big purchase of treasuries. Short-term treasuries will be bought in the amount of $6.2 billion. After that, the volume of purchases will be miserable, and it can be said that starting from next week, the euro will be hard to demonstrate its strength. I expect a strong strengthening of the dollar from March 16, when the Fed will completely stop buying assets and raise interest rates. What do we have in the dry residue? Today and tomorrow, the euro has little chance of strengthening, but, in my opinion, we will not see strong movements, since investors will use this growth to increase their sell positions. Trading recommendation. Flat 1.1275 minus 1.1370 British pounds per USD. The situation for the British currency begins to deteriorate. Firstly, the U.S. debt market started to grow again in the yield of treasuries, which brought the yield spread between British and U.S. securities to a new 3-week low, and the pound is now trading in the area of a 4-week high. Such divergence in the market happens from time to time, and it ends with the decline of the pound. Secondly, I expect a technical correction in oil, as investors will now close longs on black gold, which is also negative for the pound, due to a good correlation with this asset. Investors in the last month have been wary of geopolitical tensions in Eastern Europe that could trigger a ban on oil exports from Russia. The day before, the European Union and the United States imposed sanctions on Moscow, and there is not even a hint of restrictions on the energy sector there. Thus, the geopolitical premium will now be reduced to a minimum, and oil will again fall below $90 per barrel, as it was last week. Trading recommendation. Sell 1.3632. 1.3660 and take profit 1.3573. USD/JPY. We open a buy position for two reasons. First, there is a strong increase in the yield spread between US and Japanese bonds in the debt market, which signals an uptrend in this currency pair. Secondly, a technical correction is brewing in the stock markets, as many indices in Europe and North America are now near a 4-week low. For this currency pair, this is also a favorable signal, as it historically correlates with the stock markets. I'm not expecting a massive rally in equity markets right now as liquidity in the financial system continues to shrink, but a technical rebound is overdue. Trading recommendation. Buy 114.89, 114.60 and take profit 115.40.